Everyone calls them the Magnificent Seven, but they're all not magnificent. Today, I'm ranking the tech giants from Amazon, Apple, Google, Microsoft, Meta, Nvidia, and Tesla into a real tier list. We're talking fundamentals, AI exposure, and long term conviction. Let's get started. Okay, we'll go right down the list on this one. We saw Amazon at the front of the list, so I'll go with that one first. Amazon for the last few years had a couple rough years, especially after COVID, the pandemic. There was 2023, 2022. There was a lot of e-commerce margins that were crushed by this type of event, but 2024 and 2025 have been all about discipline. They've streamlined their fulfillment centers. They have better inventory management and higher prime fees, which have quietly rebounded profitability. Their ad business is now one of the biggest in the company, and it's one of the highest margin segments inside of the business as well. At nearly $47 billion a year, I think the ad business is absolutely something you have to watch for. And AWS, I mean, it's also just printing cash we've seen. It grew roughly 17% in Q2 2025 as generative AI workloads kicked in. AWS was down for a couple hours, and we saw people freaking out online. It was pretty funny actually, but yeah, the growth also comes from the huge spending they're doing. So billions of dollars are putting into new data centers, chips, and logistics upgrades. So I think Amazon is remaining a long-term compounder, but I think it's not cheap at this current valuation. And margins are we've seen by the pandemic remain very volatile. And so for that reason, I will have to stick Amazon right into the B tier, I think, and it captures a mix of steady growth but limited near term upside, in my opinion. Next on the list, I'll do Apple. Apple is the definition of stability. If we're looking at the stock price year over year, 12%, all right, that's pretty much in line with the market. Now let's look at the 5 year chart. Pretty much also in line with the market. It's a company where no other business is converting customer loyalty into predictable cash flow this efficiently on the market. Services now exceed 24 billion per quarter, and its installed base of over 2 billion devices locks in reoccurring revenue through the iCloud subscriptions, Apple Store fees, Apple Music, all these things that people use daily, and it's because they use Apple. If you have a friend that uses Apple, you're not gonna be able to do half the things that Apple phones do when they connect with each other, and they've done that on purpose. The one problem I have with Apple though is saturation. We saw over the last quarter, iPhone 15 sales were flat year over year, and they're really promoting the Apple Vision Pros. But I think it's obviously innovation, the Vision Pros, but the true AI driven upgrades are still on the horizon for Apple. And for that reason, the stock hasn't moved much, and I don't think it will continue to because Apple's valuation is implying very strong growth. And I don't think this could materialize over the next shift, especially as there's companies innovating harder. And I think the wearables, the ARs, the on device AI, it's not as exciting as other people are making out to be. Of course, they are still a huge business, though. They have an unbreakable balance sheet, huge brand, and pricing power. But I think the growth engine that made them such a big company is slowing down. And for that reason, I'll put them at the back of B, right behind Amazon, I think. Next on the list, we got Google. Google's quietly sitting in a very good spot to be. It is at the center of the digital economy. Search is currently Google owns 70% of search across the whole internet, and YouTube pulls in more than 10 billion every quarter. And Google Cloud has finally turned profitable with consistent double-digit year-over-year growth. Its AI strategy is long-term and structural. Gemini AI is being embedded across search. I've seen it on Google Docs, Google Gmail, and it's on all Android devices, which gives Google a huge step in a real world distribution network that can very few companies can match because they already kind of have the foot in the door when it comes to this. Behind the scenes, they're roughly spending 75 billion this year on custom TPUs and data center infrastructure, which is building the rails of global AI computing, and it's putting them really at the forefront of AI. It's one of those companies that you don't hear much about when you're looking at this tech bubble, you're looking at the AI bubble kinda. You don't hear too much about Google, and the valuation is still very moderate compared to a Microsoft or an Apple. The forward PE ratio, I was looking at it earlier, it is still heavily under companies like Microsoft, Apple. It's been trailing for years, and I think it's a great buy at this level. And for that reason, I will put it inside of my S tier. It combines dominance, innovation, and reasonable pricing, which is very rare in a company of this size. Next up on the list, we got Amazon. Ama- uh, I mean, Microsoft. Microsoft is currently trading at $521 a share, and the main thing I want to point out is how it's the backbone of enterprise software. Azure's growth continues to be in the double digit, as we've seen. And it's not only this, its partnership with OpenAI has turned AI from something that people just talk about casually to a subscription line item. I know people that pay for ChatGPT Pro, and I think it will only continue to grow. Also, we've seen Copilot, which now is inside of Office 365 and Windows, which is effectively charging rent on productivity itself. With nearly $85 billion in annual operating income and a balance sheet that rivals sovereign nations, Microsoft is the safest bet in enterprise tech. But that safety comes at a price. It's a forward PE around 30, and expectations are already near perfection. It's an elite business that executes flawlessly. Hence, I will put it inside of my A tier. I think so. Not S tier. S tier should have both dominance and the valuation upside. Whereas I think Microsoft already reflects most of its perfection in the share price, and that is why it is kind of where it's at today. And next on the list, we got Meta. Meta's comeback is one of the quietest turnaround tech stories in the market. I was buying Meta when it was around $200 a share, around this point, and I was like, "Oh, this feels undervalued," but it didn't feel as crazy as it really was. Of course, if you got in 2021, 2022, after the meltdown, it has reemerged as a cash generating ad machine. Q2 2025 revenue hit 47.5 billion, which is up 21% year over year, with earnings per share up 37%, driven by the Reels monetization and stronger AI ranking systems across Instagram and Facebook. Meta's comeback is absolutely insane. We've seen this also with WhatsApp. It's a sleeping giant where click to message ads are just beginning to scale internationally, and at the same time, Meta is still spending 60 to 70 billion, like these other big companies, on AI infrastructure and data centers, which is an investment which most analysts I think will think are paying off in the ad targeting efficiency and learning how computers work, how everyone's working. Of course, I think Reality Labs is burning cash for the company, but think of it as R&D for the next decade's computing platform. Meta, in my opinion, has to be put inside of the A tier, right above Microsoft. It has healthy growth, it has bold long term bets, and it's just been tampered by the spending volatility, but I think it's nothing to worry about too much. Next on the list, we got Nvidia. Nvidia is the face of the AI boom, as we've seen. We've seen the stock over the last 5 years absolutely just insane. Its chips power nearly every major LLM and data center built out worldwide. Data center revenue doubled year over year, 22 billion last quarter, and software like Cuba and Omniverse creates a moat that competitors can't easily replicate. My thing is that the dominance comes with huge expectations for Nvidia. There are hyperscalers that are designing their own accelerators. I've made videos on some of them, like Nebius, Iron, and Chinese demands face export limits, and the stock trades around 40x forward earnings, which is pricey even by AI standards, in my opinion. Nvidia is absolutely a brilliant company. I'm not gonna lie, and I'm not gonna sit here and say it's not a absolutely cash generating machine. It's the best hardware in tech, and I think it's at where it's at for a reason. But I think it's also a lot sentiment driven, and that's why for me, I think it will have to land in B tier, right in between Apple and Amazon on the list. Last company on the list we see is Tesla. Tesla reported earnings yesterday. We saw the stock drop probably around 5%. It was expected to be an 8% move, but it's probably the most polarizing stock in the world. If we're talking about Tesla, there's people that love it, people that hate it. I think the vision of autonomous driving, humanoid robots, global energy networks is absolutely unmatched, and no one has that type of innovation or creativity that a CEO like Elon Musk would have. But execution hasn't really kept the pace. We've seen automotive margins have fallen 29% in 2022, roughly 17% today as price cut spends across models. Competition is also in EVs from the Chinese legacy to legacy automakers. It's eating into the share that Tesla once had at the start of 2020. It had such a huge market share of this growing market, and it's kind of falling, and growth in deliveries has also slowed down. We've seen the energy and storage segment is improving. It's one of the main components that I think they are focusing heavily on, but it's still too small to offset how weak the automotive industry has been. So for me, Tesla deserves credit for its ambition and how it is planning to grow in the future, but right now it's trading more on its faith and people's belief in Elon Musk rather than fundamentals. So until we see real cash from autonomy or energy scaling, I'd say it will land in C tier for me, where it's too volatile to really tell, and I think it is overvalued at the level it is right now. So that's my 2025 tech stock tier list. Google earns S tier for unmatched scale and AI reach. Microsoft and Meta dominate A for consistency and their innovation that they constantly continue to promote. We got Amazon, Apple, and Nvidia in B. It's still high quality companies, but fairly priced plays. And Tesla rounds it out with a bold story and risky execution. I might have to slip it down there. Comment down below which one you would move up or down. Hit the like if you enjoyed this, and subscribe so you don't miss out tomorrow's breakdown on a different stock. And I'll be running through some strategies. Peace.